All right, everyone, welcome to this new module. In this module, what we're going to do is we will talk about how to trade the trend. So there are two concepts to this. One is when we know exactly how to trade the trend, and the second is when we know exactly how to counter trade the trend. Let's say, for example, if price is moving bearish, then we know, okay, what to look for to take a buy. Because a lot of times what happens is whenever price moves bearish, or whenever, let's say, you have gold and gold is trending bullish, we know that there's a lot of volume and price starts to continue to push up, let's say, for example, and we look at the chart, we look to the left-hand side, we look at the daily time frame, 4 hour, whatever, and we see, okay, you know what, maybe we've reached a level of rejection. Maybe if gold has been pushing up for the past 2 or 3 days, now we've reached a point where gold will reject, and this is the point I should take a sell. And a lot of us are guilty for that, because when we do take a sell, price continues to push up and we continue to lose trades at that point, right? Because we're trying to basically get the best price for a sell, or we're trying to get like a best price at the buy if price is moving bearish, so that's very, very difficult. There are certain technical things that we need to look at when we're looking at candle structure and the way the market is forming at that point. We need to take those things in account and then decide that whether a counter trend will make sense or not. So that's something that we will discuss in another module. But for today, we're only going to talk about how to actually trade the trend and what different scenarios you may face while you're trying to trade the trend, right? And also, okay, so one thing we need to keep in mind, and please write this down, one thing we need to keep in mind is to never change your bias. If you change your bias, that's going to confuse you, that's going to lower your confidence, that's going to lower your confidence in you in executing a profitable trade if it does show up. So keep the same bias, because a lot of time what's going to happen is you're going to come to the charts, you'll do your analysis, you'll draw your fancy lines and indicators and whatever, and you're going to have your bias, right? Your bias is going to be, okay, my bias is bias. So if you're sticking to the buying bias, you have to stick to that bias. If you take a trade and a buy and you lose a trade and now you're thinking, okay, prices are going to move down and now I'm going to change your bias from bias to sells. No. Write this down. Never change your bias. Don't change your bias. No matter what anyone says, no matter what analysis you see anywhere online or in a group chat or wherever the fuck you are, don't change your bias. If you have a buying bias, stick to the bias. Because how many times has this happened where you will take a trade, you have a bias, it's a buying bias, you lose that trade, and then you take a sell, you lose that sell, and you're like, ah, shit, now I've lost 2 trades. And then price starts to go in a buy position again, and now you've lost 2 trades. Your confidence is so low that you're not able to execute on your bias you had originally. So if you have a same bias, the same buying bias, and you're trying to take a buy, and you lose that trade, just stick with that buying bias. Because sooner or later, that buy is going to appear again after a fake out or after whatever price does. Once that buy appears again, you're going to be ready, because you've taken the first loss in your buying bias, you haven't changed your bias, and now you're taking the second trade in a buy for price to continue to push up. So let's talk about the different scenarios. Let's sort of also explain what a trend basically is and how exactly you're going to be able to trade the trend profitably. So, for example, let's say we have a resistance right over here, right? We have a resistance, we have a candle that's coming up to resistance, a bullish candle obviously. And after the bullish candle, we have a bearish candle that forms all this. Now, we have a bearish candle. Now, we know that whenever a resistance is formed, we're trying to sell a downtrend. Whenever you have a downtrend, it's going to create resistance and it's going to continue to push down. That's something we have to look for. And whenever, let's say, you're looking at a downtrend, it's going to be forming a resistance, and we know that the best possible outcome on this is going to be on the 30-minute time frame, all the way up to the 1 hour, and all the way up to the 4-hour time frame. That's where you're going to have the most sort of what's the word? Confluence. No, not confluence. That this time frame is going to be, I don't know, it's the strongest time frame for price to go down, right? The 30-minute, the 1 hour, and the 4 hour. Now, what you're looking at, what I'm basically looking at, my way to trade the downtrend is if I'm going to get a 30-minute candle that closes bearish, I'm going to have my stop above the previous candle, and I'm going to expect the next 30-minute candle to continue to push down. That's all what I'm going to look for, right? And in real life, like, we're going to look at some examples too. It would look something like this. You'll have a bearish candle coming down, you'll have another bearish candle to come down, and then slowly we start to move down, and then we start to create some sort of a support. So a lot of times what guys are going to do, is they will say, okay, like, what, now we formed some sort of a support, and at this support, let me take a buy. So the problem is, if you're taking a buy over here and you're expecting price to go up, the next candle may continue to go down like this, and now you're stuck in a buy. What are you going to do at this point, right? So don't do that. I know it looks enticing. I know it's been done before. I know some traders do that. I do take buys too, but I understand the risk. I understand the risk. I understand what the probability is for price to do a retracement or for price to continue to push down. So whenever you're faced with a support form, just stay calm. Stay calm. We're in a downtrend, because once you do your analysis is going to be like this. Trend is down. Okay, perfect. Time frame is going to go over here. What you are looking for, let's say I'm going to write looking for, so trend is down, time frame you're looking at, 30-minute time frame. What you're looking for is maybe a resistance, right? We're looking for a resistance to form. That's all what we're looking for. So what does a resistance look like? Maybe after this we're going to have a candle that goes up, we have another candle that moves up, and then we have a resistance forming once we have a candle closing bearish. Okay, this is where you have the perfect world trend sell at this point, right? If you're looking at the perfect analysis, the picture perfect analysis is going to look like this, where you have a resistance form, and all you're going to do is, okay, you're going to say this is a 30-minute time frame. I'm going to have my stop loss above the previous candle and expect the next candle to continue to push down, provided this is a 20 to, like 20 plus pip range. That's what you're looking at. This is the perfect world example to trade the trend. If someone asks you how do you trade the trend, you're simple. You're like, okay, first you got to look at whether we're trending down or whether we're trending up. There's another module where we talk about how to exactly know whether we are trending down and how to exactly know when we're trying to trend up. So you have to take a look at that first, right? So now once you understand if the trend is pushing bearish or bullish, then you're looking at certain key things. The first key thing I'm looking at is if it's a downtrend, I'm looking to see if we're creating a resistance, right? So here we are creating a resistance, which is denoted by R. You have a stop loss right over here, and you're expecting the next candle to continue to push down. Okay, as long as the candles are making lower lows and lower highs, you're expecting the candle to continue to push down. Now, one mistake that traders do make, which traders make is this. Now, let's say you're going to have a resistance formed, and now you're expecting the next candle to push down. One mistake guys are going to make is, now let's say, for example, our range is 25 pips, okay, on a 30-minute time frame. We have a 25 pip range on a 25 pip, 30-minute time frame. God damn. Right? So what you're doing is, if the next candle closes like this and you take a sell right over here, let's say you're taking a sell, and the next candle closes like this, but it also moved down and then continue to push up. A lot of time what guys are going to do is you will hold your trade. You will hold your trade thinking that it should come to some magical level where candles were moving or whatever, that it should tap that level. It should at least touch that level or close right over there. And let me break it to you right now. Whenever you're doing that, you have to understand price doesn't have to do what you think price has to do. Price doesn't give two shits what you think where it should go. If I'm in a trade And if price is moving towards support, and if I see I'm up like, 18, 20 pips, and it's a 25 to 30 pip range, I'm securing profits at that point, because I'm not going to wait around for price to come to that support area or to the bottom of the zone so I can maybe secure more profits. No, I'm not going to do that. I'm just going to say, okay, you know what? We've reached a certain target. We've not actually tapped into that. We are almost there. I'm going to secure my position. I'm going to secure position. That's all what I'm going to do. I'm not going to wait around. So whenever you're trying to trade the trend, you're looking to see whether the range we have, are we coming close to that? Are we going to touch that? How big of a range it is? How much of a profit I'm in? So these things you have to take into account. So let's talk about another scenario that may happen. Let's say, for example, we are trending bearish, okay? We're trending bearish. We're also going to take a look at some examples too later on in another module. So let's say we're trending bearish right over here. We have another bearish candle which moved down. And now what ends up happening is that we end up consolidating, right? You have a candle that closed bearish. There's not enough range. We move down, and then now we're starting to basically consolidate. We have all been through this, and once we start to consolidate, we know this is our resistance, and so we have a support and a resistance. Okay, we're consolidating now. What do we do at this point? At this point, we basically just wait, because let's say, for example, as we came down, we created a resistance right over here, and you're like, oh, okay, well, Raja said we've created a resistance in the downtrend, we should take a sell. And you took a sell, and price came down over here, we moved bullish with the next candle, and we're raging at this point, and you've probably lost the trade, or you've probably closed the trade because you didn't really feel confident or comfortable enough. So now you're saying, okay, you know what, I'm just gonna wait now. So the worst thing you can do is to look for a buy in this scenario. That's the worst thing you can do. But the best thing you can do is to look for a possible re-entry in the sell. That's the best thing you can do at this point. So now if I'm looking at this, and if I see that we have a candle that closed bearish, all I'm looking to see is if the next candle can break and close below support so that we can continue to push down, right? Number one, break and close below support. And then number two is whether we can have a sort of an impulse entry as price continues to push down. But if we talk about impulse entries, what do we have to keep in mind? What do we have to keep in mind? We have to keep in mind the time. We have to keep in mind that the impulse entry is in a time when there's volume in the market. When you have pre-London, London Open, pre-New York, New York Open, right? All these times there's a high volume in the market. So we have to keep in mind that there's volume in the market for impulse entries, but we're only going to focus on when candles are closing. When candles are closing below zone, now you have some sort of an opportunity. So this is the first scenario. The first scenario, write this down, okay? First scenario, when price is consolidating, what's going to happen? That a candle is going to close below the zone. Once we're closing below the zone, there's a higher probability the next candle can continue to push down. Just like that. The 30-minute candle or a 1-hour candle, and honestly, that's all what you need. 15 pips, 20 pips, that's it. Secure 90%, 95%, and let the rest run. You don't have to waste your time. Don't waste your time in waiting around. Just get your 15, 20 pips and let the rest run. That's it. And let compounding deal with the growth of your account. That's all what you got to do, right? So this is the first scenario where the candle closes below the zone after we're consolidating in a downtrend for it to continue to push down, right? Now, the second scenario looks like this, that you have a candle which after the bullish candle, let's say right over here, we close bearish, just like this, right? Now this candle can be of any size depending on the previous bullish candle, but you got a candle that closes like this. When you got a candle that closes like this, there's a very high probability the next candle will continue to push down. The only problem you may find at this point is going to be maybe the stop loss is going to be a little bit bigger, because if you're taking a sell right over here at this candle, your stop loss is basically, right over here. This is your stop loss, right? It's above the previous 30-minute candle. It's not above the zone right here. It's above the previous 30-minute candle right over here. This is your stop loss at this point. And it's a pretty big stop, So if you're looking at a 30-minute time frame and you're faced with a scenario that looks like this, and on the 30-minute, your stop loss is bigger, I would say maybe drop down to the 15-minute time frame and have a stop loss above the 15-minute candle. But it also depends how big that 15-minute candle is, So it's that, like, you have to play around with it a lot. But whenever on the 30-minute, if my stop is big, my rule of thumb is then I'll look at the 15-minute and then I say, okay, you know what, if I'm going to take a look at the 15-minute, I want to know that if this stop will make sense. If it makes sense, I execute. If it doesn't make sense, then I still take the chance with a smaller risk, right? So this is the second scenario which you may find happening when price does something like this. At this point, there's still a higher probability for price to continue to push down if you're trading the trend. Now, the third scenario is where, let's see right over here. The third scenario is where you have the next candle that closes bearish like this, and it breaks the lows and comes up like this, right? Closes bearish. Now, in this scenario, what happened is that the candle broke the low of the previous candle and closed back above support. Don't take this. Don't take this trade. This is very, very tough. You won't be able to, do anything in this trade. So don't take this trade because the candle closed above support. So if you're closing above support, this means is that price tried to go down, it pushed down, but it couldn't maintain its move below support. It couldn't maintain its move below support at all. So it closed back above support. So don't execute on this. It's very, very tough. At this point, we're still consolidating because now the candles are printing side by side, right? So notice all the examples. If candles are printing next to each other, price is just consolidating. So this right over here, look, this candle formed over here, we formed right over here, we formed right over here. So we're just basically, printing side by side. So whenever you have candles printing side by side, it's just ranging, So even at this point, once you have a candle close in such a manner, all you're looking for is to see that, okay, if the next candle can close bearish like this, and then have the following candle to continue to push down. Because now you have your confirmation. So this is your confirmation, right? So whenever you have a candle that's closing below a zone in a downtrend, or if it's closing above a zone in an uptrend, that's your confirmation candle. So once you have your confirmation right over here, now you know that there's a higher probability for the next candle to continue to push down. Okay, so you're always looking for your confirmation. You're always looking for that confirmation candle, which can tell you that, okay, now there's a higher probability for price to continue to push down. So when you're looking at things like these, you don't have to look at some, advanced concepts like a candle pattern or price tape or whatever, right? You don't. All you have to do is to wait for the candle to close. If a candle is closing in a way which you can recognize, and there's a time and there's volume in the market at this point, you're looking at a 30-minute time frame, you have candle confirmation, and all these things align together, and now your confidence builds up more. Now there's a high probability for price to continue to push on. So it's very, very important, right? So this is something that we talked about, a downtrend. This is completely the same for an uptrend. So whenever you're looking to see how to trade the downtrend, it doesn't matter how long this it doesn't matter how long this consolidation gets. It can be 26 candles, 30 candles, 40 candles. It doesn't matter. Sometimes price is consolidated for about 2-3 days. And then all what happened was that there was news that pushed price, because price will only consolidate if it's known that there's going to be high amounts of volume coming in soon from a news event, from an announcement, or whatever the case is, right? That's the only reason price will consolidate. So whenever price is consolidating, you're looking to see if a candle is going to print in your favor, right? So I would say maybe go over this video, a second time or third time to really understand and grasp the concept. We're going to talk about examples, and we're going to look at some examples as well in another module. So go check that out. But for this, when you are looking to see whether you're going to trade the trend or like, you're going to counter trading the trend, we're going to talk about in another side. But on this one, it was very, very important to understand exactly how to trade the trend and what different scenarios you can face while you're trading the trend. So take care, everyone. We'll see you in the next one.